What's up guys, welcome back to the channel. Today I want to talk about the game of trading and how to win. Alright, so the game of trading, and a lot of people have misconceptions about this, but the game of trading is to win and to make money, and that's the entire game. And lately I see a lot of people, and it has been going for quite some time right now on social media. I see a lot of people aiming for the best entries, the best pyramiding into a trade, the tightest stop loss, the highest risk to reward, whatever they do, but they miss the point. The point is to make money. And yes, these things can help to make money in the markets, but the aim, winning the game, is making money trading. That's what it's about. You want to build a career, you want to get income out of trading. And a lot of people get distracted by the flashy entry, the tight stop, the big risk reward ratio. So I guess a lot of people should think, and if you're watching this video, really think for yourself, like, am I focusing on the things that don't really matter that much? The core is making money. That's what it's about. So think for yourself, am I focusing too much on the tight stop? Am I focusing too much on the perfect entry? These things can help you, don't get me wrong. I'm always working on improving my entry and seeing if my stop can be tighter, seeing if I can make more money on trades that I take, etc. That's totally fine, but don't let it distract you from the real goal, which is making money. You're playing a game against people that are way more professional than you. They have way more information, they have way more capital, and you're just sitting there like I am by my desk and thinking I know it all, and I do know a bit about trading, but during this game you want to make money and you're playing against very organized people with a lot of money. So you have to be prepared and you have to be realistic, and the only way you can do that is if you focus on the point of the game, build a routine around it, build a game plan around it, and only trading when the odds are in your favor. And then you click that button. And the rest of the time you wait and you improve yourself. That's how you win the game. That's the game. The game is making money. So please think for yourself, am I focused on the wrong things? Am I trying to improve things that don't really matter that much? Because if you try to find a perfect entry, then you miss opportunities. If your stop is too tight, you often get stopped out before the real move happens, and then you're probably feeling like shit because you missed it, but you were right on the idea. There's always a certain balance in these things. So it's getting a better entry, a tighter stop, a bigger stop. You have to balance these things out in order for it to work efficiently for you. Everyone is different. I don't like to trade with a tight stop, but I can improve my entries to get a better risk reward, etc. There's lots of things to do, but keep a focused on the main goal. That's to make money in the long run. So with that out of the way, I want to basically add on to one of my last videos where I spoke about keeping it simple. And I told you guys that a lot of people just make it way too hard for themselves to make money. And that's just such a shame. They make it so complicated. And that's why I kind of want to talk about mechanical trading. As you guys know, if you've been watching my channel, I really like mechanical trading. My trading is around 90% mechanical nowadays, and around, I'd say, 10% discretionary. So heavily mechanical. And the reason being is that especially when you're a beginner trader, or when you are in your first 1, 2, 3 years of trading and you're building your strategy, the more complex and subjective it is, the harder it is to backtest. And you want to test because you want to see if what you're doing has worked in the past. Because if that's not the case, then why even bother? Why would your strategy all of a sudden start working if you've learned it from someone that isn't even profitable in the first place? That doesn't make sense. But if someone drives a fancy car and sells you a course, people just assume that his strategy works and his methodology works. which is not true at all. You always have to test everything. Even if I tell you something to do, test it for yourself. Test if it works. Test if it works for you. You are different than I am, probably. So the point is, test something, and it's easier to test if something is mechanical and structured and rule-based. It makes it way easier to backtest. You don't waste as much time thinking about it because it's not subjective. You can just backtest, get the data, analyze data, see where you can improve. And then later on, when you trade demo and you can see it's still profitable, then you're like, okay, I've backtested it, it works. I'm demo trading it, the strategy works. Then you go live, and then when you're trading live and maybe all of a sudden it doesn't work, then it's on you. Then it's you making the mistakes because you have tested it, and if you did it properly, then you know it works. And then comes the part where you can add discretion. And most people start fully discretionary with maybe 1 or 2 rules, and then they wonder why they're not consistent. It's because there is no consistent process. And they haven't taken the time to test and to test and to test and to get the data. So I believe that only when you actually have backtested the mechanical strategy and it's all planned out, you got the data, and then when you've been trading it for a while, when you get the experience in the market with your strategy, then you can start to add a bit of discretion to increase performance. Because mechanical systems are great, but I think the best trading comes from a combination of mechanical and discretionary trading. Because when you have experience with your strategy, you start to notice times when it works a bit better than it does another time. And if you're just following the rules, you're not going to anticipate on it. But if you are having the experience and you know some things have worked in the past, or some things happened in the past, or when you saw something happening in the markets, then you can add in your experience to the mechanical strategy and maybe cut your loser earlier, or maybe add a bit of risk. Again, you want to keep stats on those things, but that's when you start to add in a little bit of discretion. And that's what I did. My mechanical strategy just worked. I have so many sheets with data. Just yesterday I had a call with someone on Zoom, and he was like, holy shit dude, you've got a lot of data. So everything I did was mechanical in the beginning. I've got a lot of data, but because I've been trading the strategy for so long, I started adding in a bit of discretion because I noticed certain things happening over and over again, where I could decrease my stop size. And it works, and it increased my performance, but I only did it after I've been trading the strategy for so long. So if you are a beginner, if you have been trading for a while but you're not consistent and there's no structure, start with a mechanical strategy. Make it very simple. Make it rule based. Just write down all the rules, and just every time you enter a trade, look at all the rules, make sure they fit with what's on your chart, then take the trade. Then you get a bit of in the habit of trading in a structured way, and then you can backtest it, and then you can get the data, and then you build your foundation. So in terms of adding discretion, I do want to be very clear. Everything I do is based on data, which means that I'm not going to add size because I feel good that day and I had sex. That doesn't make sense, and that's what a lot of people do when they had a good night of sleep. They feel confident and they're like, oh, I'm going to up my risk, and then it doesn't work out that way. That's not what I mean by adding discretion. What I mean is that you have a trading journal, and if you're doing it properly, you take notes every trade, and you have print screens of those trades. And then when you review everything, you might notice some things happening in your setup, in your print screens, in your notes that come back over and over again. And that might connect your best trades and your worst trades. That's something you can rely on. So then you can put data on it. Then you're like, okay, if this happens and I tighten my stop, my risk reward goes up without impacting my win rate too much. And that increases my R over the long term. It's a bit discretionary, but you still have statistics to back it up. And that's what's very important. You don't want to just, based on gut feeling, make adjustments and add discretion in and, oh, it looks good. Others are head and shoulders. I'm not sure if it works well, but it does look good, so I'm going to add risk. That's not how it works in my opinion. You want to have some data to back it up from your trading journal. Maybe you trade on a simulator and add in the discretion to see how it performs. Many ways to do it. The point is, don't be ridiculous with it. Yes, you might have some experience with your strategy, but still keep data on it if you want to add discretion. See how it performs, and when you're tracking performance and you see your performance goes down, then you just change it back to how it was. There's nothing wrong with it, but you want to be sure that the data is on your side. So I guess that's what I want to end this video with. So number one, know the game. Focus on making money in the long term. Great entries are good. Good stop losses are great. They can increase your performance, but it's not the name of the game. The name of the game is profitability and being organized. You're playing against people with a lot more knowledge and discipline, so you need to be organized. You need to know what you're doing, and you need to understand the point of the game, which is to make money. Now, the second thing I spoke about is mechanical trading. Make things simple and rule-based, so it's easy to test, easy to execute in the live markets, easy to get statistics, and easier to just trade and make money with. And then when you have been trading it for a while, add systematic discretion based on data to improve your performance. Hopefully you liked this video, guys. If you did, leave a comment down below, subscribe to the channel, and then I'll see you next week.